Most investors prioritize increasing their wealth over time, yet cash loses value quite rapidly because of inflation. Cash loses value quite rapidly. This is why it's crucial to invest your cash in order for it to increase in value and contribute to your long-term financial security. Curious to know more? Now, let's get deeper into this. Hello everyone, and welcome to our channel. Don't forget to subscribe to this channel and press the bell icon to never miss an update. By investing, you may delegate some of the laborious tasks to your hard-earned money. On paper, this seems fantastic, but in practice, there is some risk involved in investing, and investors must choose if the trade-off between both the risk and the reward is worthwhile. Don't immediately abandon all of your investment ideas if you're afraid of losing the money you invested, since you're not the only one who feels that way. The good thing is that there are several strategies you can use to reduce the risk you incur while investing. Number 1. Have a diverse investing portfolio. Put simply, diversification means don't put all your eggs in one basket. You may avoid being too exposed to a single market by investing in several assets and sectors, including shares, bonds, term deposits, savings accounts, and a number of assets and sectors, including stocks, bonds, term deposits, savings accounts, and both residential and commercial property. By diversifying your assets across many asset classes, you may protect yourself from a single investment's decline in value by having backup investments that may appreciate in value due to the same investment boom. Moreover, don't be scared to think creatively. Only 1 in 6 of us aim to use alternative investment choices over the next 12 months, according to research from finder.com.au. This makes it possible for risk-taking investors to profit from non-traditional investments like peer-to-peer lending or robo-advice. Do your homework and make sure you are aware of the additional hazards. Number 2. Know your investing objectives. If you have defined some clear personal and financial goals for yourself, then making the choice as to which items to invest in will be much easier for you. If you want to be sure that you have enough money when you need it for a trip within the next year, you could do better to invest in low-risk assets. This will ensure that you do not find yourself in a financial bind. If you are beginning to look about the long term and allowing yourself around 30 years to add more money to your retirement plans, you probably have the ability to choose an investment that has a larger risk, but will also provide a better return. This is due to the fact that you will have a lot more time on your hands in the event that the value of the investment suddenly drops, giving you the opportunity to wait for it to recover. It's possible that the goals you pick will influence how much risk you're willing to take. Consider making a low-risk investment even if you think there is a good chance that it won't net you a huge return. This is the best course of action to take if you don't think you could stomach seeing your investment go down in value. After you have been used to the fluctuations in the market, you will be in a better position to consider investments with larger risks and a bigger potential return. Number 3. Monitor your assets carefully. You probably conducted a lot of study before making your decision about where to invest your money to ensure that you would make the maximum profit possible given the level of risk that you are willing to take. Maintain a close watch on your investment so that you do not throw away your time and work for nothing. You run the danger of missing warning indicators that your investment is losing money or missing the potential to gain when the market is flourishing if you merely invest and forget, as some people call this strategy. It is advised that you do an evaluation of your assets once a year. However, the more regularly you do it, the better. Make use of investment tools such as ShareSite to track dividends and performance so that you can get an idea of how your assets are faring over the course of time. If there is a rapid drop in the market's price, it is important to remember to have a flexible mindset and not to panic. Always keep your financial goals in mind, and if a certain investment isn't helping you get closer to achieving those goals, don't be afraid to switch things around in your portfolio. Number 4. Be wary of con artists. We have the mentality that it'll never happen to me, despite the fact that the vast majority of us are aware that there are people who commit fraud. Regrettably, con artists are continually improving their levels of knowledge, expertise, and persuasion, making it more difficult for all of us to differentiate between fakes and the real thing. Do your research on the company and make sure they have a license to operate in the Australian financial services industry, AFS. This will guarantee that you won't be taken advantage of by someone trying to pull a fast one on you. In addition, you should be suspicious if they are persistent if they attempt to force you to make a decision quickly, if they phone you from another country, or if they charge you outrageous costs to withdraw money from an investment. Keep in mind that someone you put your faith in might potentially seek to scam you by becoming engaged in a sketchy scheme. Fraudulent schemes involving investments are not generally perpetrated by unknown individuals. When making an investment, there are a lot of different things you need to think about. You shouldn't let the prospect of coming up short dissuade you from taking part in the game, since there is also a chance that you may rack up some impressive wins. If you seek the advice of an experienced financial counselor or broker, your concerns will be put to rest. Make it a habit to think logically rather than emotionally at all times. Start using ShareSite to keep tabs on your assets. Join the hundreds of investors utilizing ShareSite to follow the progress of all their assets in one location, reducing risk. Track all of your assets, including more than 240,000 worldwide stocks, ETFs, mutual funds, managed accounts, real estate, and even cryptocurrencies in one location. Run effective investor-focused reports such as performance, portfolio diversity, contribution analysis, and multi-period, multi-currency valuation. With ShareSite's annualized performance calculation technique, you can get the whole picture of your fund performance, including the influence of transaction fees, dividends, and capital gains. You may easily give family members, accountants, or other financial experts access to your portfolio so they have a similar picture of your assets as you do. That's it, everyone. We would like to hear from you in the comments below. Make sure you are subscribed along with turning on the notifications. Thanks for watching, and I hope to see you back in the following video.